So welcome back. Everyone who is still in the corridor, please join, because we have started today discussing the trends, discussing how to be famous, talking a little bit, about the product, but the reality is that we do all these things to get the funding. So we'll start now with a session of how to be VC ready. Then we will actually continue discussing a little bit the ecosystem. Then we will have 6 more pitching from startups who are competing for 3 key prizes, which we did not announce. I'm using the time to have people to come in. The first prize, I don't know, if you know, it's the opportunity to pitch the idea and present at the IE Venture Day in Madrid with all expenses covered. And today we will have later on Isa, who was the winner of IE Venture Day in Madrid. With his company Taiba, they went through the 3rd round of financing, raising 4.5 million euros. So he will share how he has done this. So the first prize will be to go to Madrid and to pitch your idea in front of the whole lot and pool of investors. The second prize will be 100% scholarship on the executive education with IE Business School. The third will get consulting from Deloitte, and then we also have a couple of more very nice prizes. I'm trying to understand where I have to stand so that we don't hear the sound. However, right now, I want to hand over to Vanessa, who has traveled to us from Madrid, and she represents a very interesting governmental initiative, which actually means that government is a part of the ecosystem. So don't listen to and don't trust everything which Mike Butcher told you today. Okay, Vanessa is here.
I kind of agree with you.
Vanessa, don't kill the idea. So Vanessa, I hand over to you to tell a little bit what Spain is doing in terms of attracting and interacting startups, encouraging entrepreneurship. Tell us a little bit more how the country is welcoming this, and then I will let you introduce the panel speakers to moderate the panel on how to be VC ready, okay?
Okay, the first thing I would like to do is thank you for being here, because it's been a very long day, very interesting, but very long, so always keeping attention for so long, it's difficult. So thank you to all of you, and I would also like to thank you, the organizers. Everything is very well organized, and everything has run smoothly so far. So I would like to congratulate them for that. Well, as Tatiana told, I belong to BEL.BIZ in Spain, which is a governmental organization of the Spanish government. It is part of the Ministry of Economy and Competitiveness, and what we do is helping foreign investors and foreign entrepreneurs to actually do business in Spain. So we provide them with all the tools they need, all the information they need regarding their markets, regarding the administrative information, how to deal with red tape in Spain, with bureaucracy, etc. We help them in getting to know what are the incentives and the grants they may get for developing their projects, and we help them to find an adequate location within Spain. Spain is quite a wide country, so we help them to be guided to choose an adequate site location for their business. What we intend to be is the meeting point between the foreign investors and the foreign entrepreneurs and the different companies and the different entities that are actually working in Spain at the national, local and regional level. So I would like to tell you a little bit about the main advantages about investing in Spain. I'm going to be quite quick about this because, well, if you have any question about any specific point of my presentation, I will be around here and will be more than happy to tell you about that. The first thing that Spain has as an advantage, is the market. So we have a very wide market to work with, not only domestically, although we are already more than 46 million people, but also because of the fact that we belong to the European Union. So you have the advantages of working in an intra-European duty-free environment. You have the single currency of the euro, and you have free movement of people, goods, services, and capital. So it makes it easier to do business. Spain is also a very good platform to work with the Latin American and the North African countries. Regarding Latin America, as you know, we share the language, so we have very traditional cultural trade and investment links. And regarding North African and Mediterranean countries, we have already the closeness, the geographical closeness, and also a good relationship. Regarding infrastructure and technology, these are very important points for working nowadays in this business world, because as Mike said before, also we in Europe cannot have a Silicon Valley, so we need to have Silicon bridges, as he said. So we need to have a very well developed network of infrastructures. Well, just to give you some points, in Spain, for example, we have the widest fast train network in Europe. We have 47 airports with 2 main international hubs that are Madrid and Barcelona, and we have also very good maritime connections. We have also, which is very important for high technology entrepreneurs, 81 technology parks that are hosting nowadays more than 6,000 companies. And the main sectors in which these companies are working are ICT, engineering, consultancy, energy and environmental technologies, everything well related to new technologies. About incentive and taxes, as I said before, Mike this morning said that the only thing that government should do is providing entrepreneurs with incentives and taxes. We do some of this in Spain, so I would like to talk to you a little bit about this. The first thing is that we are eligible, or some regions are eligible to provide investors with subsidies up to 35% of the investments. And even for small and medium companies, these incentives can be higher. Also, Spain has a number of institutions working in promoting incentives in several aspects, such as R&D, investments, and human resources training and hiring. I'm not going to go into detail because, as you see, it's much information. But well, what we do at Invest in Spain is specifically talking to projects, to investors and entrepreneurs with a project, to let them know which are the most appropriate incentives for them. It's just for you to see that we have a good bunch of these type of incentives. What I would like to tell you about is that our entity, my entity, Invest in Spain, has developed their own program to provide foreign companies that are developing R&D and innovative activities in Spain with up to 200,000 euros for their project. These are subsidies, so you don't have to give them back. So it's a good incentive for foreign people, foreign investors to go and have a project in Spain. Also, regarding taxes, we have very good fiscal incentives for R&D. As you can see there, Spain is the second country in the OECD with the most favorable tax regime for R&D. We also have an incentive that is called patent box, which means that 60% of the income that you get from letting the rights of your intellectual property rights, for example of patents, are exempt of taxes. So this is very interesting too, and well, it's a very unique incentive in the European Union. Also in general, the tax burden in Spain is quite low, as you can see in this chart. For example, the general corporate tax this year was 28%, which is well below the European average, and for next year will be 25%. There are moreover reduced special tax rate for small and medium companies that were created from the year 2013, and it's only 15%. There are other favorable tax incentives, especially devoted to foreign companies, foreign investors. So, for example, foreign workers get a fixed tax rate of 24%, which is also quite favorable and quite below the average. Now, Spain is also a country with a very competitive, highly skilled workforce. But the labor costs are also below those of the European Union, as you can see in the chart. And Spain is the fourth country in the European Union with a higher number of graduates of scientific and technical universities. And regarding quality of life, well, it's probably best well-known part of living in Spain. So there is even studies stating that Spain is the first country with the best quality of life for expats. We are a very multicultural country, so in fact about 12% of the population in Spain has been born foreign, abroad. And this percentage is even higher in cities like Madrid or Barcelona, for example. And well, obviously you know about the climate in Spain, the cultural, leisure activities. Because of this, Spain is one of the top tourism destinations in the world. So you can imagine how comfortable it is to live there. Now I would like to mention also the new mobility legal framework that Spain has put in force last year, 1 year ago more or less. It is a new law called Law in Support of Entrepreneurship and its Internationalization, and it includes a section dedicated to mobility, which means that there are new visas and work permits for those foreign investors and entrepreneurs wanting to live and work in Spain. The idea is to foster the international mobility of talent to Spain and to attract foreign direct investment so that the competitiveness and the innovation of the companies located in Spain can be improved. These are the main features of this new law on mobility. So as I said before, there are new visa categories for investors, entrepreneurs, and highly skilled people, among them researchers, scientists, and so on. And the main advantages are that this procedure is very fast. It's about 10 days to get a visa, and it's very economically focused. So what we want are interesting projects to be developed in Spain, and it's a permit that permits foreign people to work and live in anywhere in Spain. And the family can also come with the main applicant and also live and work in Spain with no problem. It is especially interesting for entrepreneurs, since entrepreneurs with a project that would like to be developed in Spain can apply for this type of visa and authorizations, either from outside Spain if they are abroad, or even from Spain if they are studying or doing any type of activity. For example, we have a lot of students of business schools and universities, such as IE, that after finishing their studies, they have a project in Spain that they would like to be developed in Spain. So with these visas, they can do it. They don't need to go back to their countries and wait there to have a residence visa. What we do is see the project, and if we consider that this project is interesting, we provide them with this type of visa. So it is very interesting, as I said, for people studying there in business schools or in universities. Also, students for universities and business schools can stay in Spain to work in a private company after finishing their studies. They don't need to go to any other procedure. So the important thing here is that we know that business schools like IE, for example, especially IE, have done a very good job in attracting foreign talent to Spain and foreign innovation. So what we do now from the government is to retain this talent that business schools have been able to bring to Spain by putting it easy for them to stay. Well, thank you. As I said, I'm going to be around here for the rest of the day, so if you want to have some information, specific information on any of the subjects I have been talking about, please feel free to come to me, and I will be more than glad to help you. Now I would like to introduce the panel, as Tatiana told. The panel is about attracting funds and busy reading, and I would like to introduce the people that are going to be part of this panel. Max Gurvits, who is a co-founder of CCC Startup Fund. Alexander Galitsky, co-founder and managing partner of Almaz Capital.
Alexey Melnichek,
Say Melnichek, sorry.
Maxfield
Maxfield
Capital,
Partners.
and Igor Mahanyok, angel investor.
So, well, we know that in the entrepreneurship environment nowadays we have more competition in terms of more projects and more projects that needs to be financed, of course. So, do you think that this increase in competition has also increased the quality of the projects? Any of you? Yeah.
Well, it's a hard question, right? So, as I already said in my presentation just before this, generally venture capital is pretty passive. So when there are good projects, you usually see more capital, right? I think Israel is a very good example of that, a country that had almost no innovation ecosystem whatsoever 30 years ago, and right now it's the second largest venture finance ecosystem in the world after Silicon Valley. So, yeah, capital generally follows. I think that with some probably minor adjustments, you can say that the reason there is more and more VC capital available is because it's easier and easier to build tech companies.
Yeah, I pretty clearly see that quality increases also because there is more money. Because people who have stable jobs at good companies, they feel much more supported now to leave their job and to start a startup. So I see people who wouldn't have left like 10 years ago to make a startup doing this now because it's now much easier to attract seed investments and Series A.
And don't you think there is a danger that there are good quality projects that cannot convince funders because they don't know how to do it, for example?
Yeah, I see this all the time. So it's actually very interesting because from angel investor perspective, it's interesting to find these projects where everything is good, apart from the fact that they have no idea how to raise the capital. I've seen a couple of startups like this in New York, and they definitely have to learn. But on the other hand, this could be advantage for angel investor because it's easier to come into such startup because there is no competition from VCs which do not know about them.
What do you think it is important to know in terms of having confidentiality with the company? I mean, do you like working in a confidentiality basis with the?
I think in an early stage, confidentiality usually could slower your speed. Sometimes among entrepreneurs, there is a fear that investor could stall the idea. Sometimes in Belarus I've met startups that doesn't want to talk with investors because they have a fear that somebody could stall the idea. Idea worth practically nothing. So all is execution. And you should sell your idea so there is no need to be afraid of that.
And as investors, you think that companies are turning to you looking apart from funds, other services such as advisory services, for example, mentorship?
So just to come back to confidentiality, I have seen literally 2 startups in the last couple of years that wanted to sign NDA before they even tell me what they're doing, and I didn't do it, so I don't know what they're doing. So most startups don't do it, don't ask for it, and there's a good reason because people who are investing are not the same people that would take the idea and execute on it, because this is like completely different approach to your work time. And on the other hand, as an investor, I feel obliged to not disclose too much about companies that I know, right? If the company sends me a deck which says that they had 60,000 revenue last month, I'm not going to tell this to their competitor, just because I know that if I start doing this, the word will spread and the companies will stop doing work with me. So it's all on this basically basis of fairness and of knowing each other. And if you know that people can be trusted, then you don't need to sign the paper. Yeah. On the other hand, you often do want to sign a paper for other services, like advisor services, especially if they end up being compensated with a stock plan. There's obviously paperwork for that. But usually even this paperwork doesn't include any NDA.
Can I say something?
For sure.
First of all, entrepreneur need to remember that you choose investor and not they choose you. So you need to look on investor as a simple service company which help you to grow. If you look differently and you think it is God, it is not. So the second one, no NDA for sure, since the investor look approximately, I don't know, in each direction I see approximately 10, 20 plans or companies. So from this point of view, I cannot sign NDA with anyone. So you need to be careful. You need to go through portfolio which investor has and to look, since not all people are very honest in our society as well, I mean in investor society. So you need to look through portfolio and to see, do I have some company which is similar to you, or I can use some knowledge which you bring to me during discussion, which I could share with my company. So it is most important for you. So from this perspective, no NDA and no different type of this agreement, since you are common and you choose investor.
Well, I would like to ask you about the team. I mean, what are the main aspects you look for in a team?
Sure, maybe start from my end. I have this kind of two takes on teams. What you usually see in these geographies, in relatively underdeveloped startup communities, like Belarus, like Bulgaria, where I spent a number of years, is that you don't really get to choose teams very much. You usually end up starting something with the people that you know best. Very often it's a family member, it's a colleague, it's a fellow university student. And that, of course, is always a test, and it makes it pretty hard because you have these almost tribal commitments on a local level that are very hard to break, right? When it really becomes much more interesting, so for that reason, I don't look too much at teams when it's an early stage deal. You want to see the chemistry in the team. You want to see that people are fair to each other. Fair goes both ways, by the way. It doesn't mean that equity has to be equally spread. It depends, who's doing how much. But it's usually a given. Very often, if you see bad chemistry in a team, or bad attitude, or zero commitment, or not enough commitment, that would be the reason to pass on the deal. So from that point of view, yes, team is most important. But the quality of the individual members is very hard to influence when you're in very limited geographies. Because basically there is no market here of skills, of people who actually built startups successfully, or that market is very small. When the company is getting to a level where it has some kind of validation, it's getting ready to expand, to raise Series A, for instance, or a large seed round, that's when it becomes much more interesting, because then you actually need people in the team that are experienced, or at least know where to look for it.
So yeah, I noticed that for me the most important thing in a team that I look at that how I think they can actually grow the team, right? So for CEO, the main skill is hiring people. CEO doesn't have to be super good at anything, apart from the fact he needs to know how to delegate and hire people for that. And when I see in some of the best startups, when I see that there is a strong CEO that can explain why he taken this or that person as co-founder and who he is looking for as the next hire or he already hired, and he can explain how he chooses the people for the task, like the lead engineer, the lead marketing person, and so on. This is the most important. And the other thing is that yes, there should be very strong cohesion and the feeling that the team doesn't fight, right? So there is no bad attitude. Though not always investors don't always, especially angels, don't always have a chance to actually look at the whole team. I often do investment just based on the conversation with only CEO, not the whole team. And you can see from the track record what the team can do. Like you can see, can they do sales and marketing from the traction? You can see if the technology company, is their product strong enough. This is also important. And obviously, I always look at the resume of the people. What did they do before startup? It's unfortunately not like that many startups are actually done by college dropouts, even though we know a couple that were successful. But most of the actually good startups are done by people who had grown to a decent job somewhere before this, either at a big company or at another startup. And this helps to understand.
Yes, building a good co-founding team is maybe as hard as building a family. Sometimes even harder because co-founders spend together like 15 hours per day, and they need very good communication inside that team. So while assessing and evaluating teams usually helps their previous experience. We're trying to find what co-founders were doing together before they founded a startup. And usually it is a very great predictor. The second one, hint maybe, is to speak with the whole team in one room and to try to ask them simple questions about their future and to look how they will communicate, how they will solve any type of case. Yeah, so the team is most important.
Everyone agrees the team is important, but we need to understand that we don't know too many cases when the guys who started companies, they developed this company up to 20, so 100, $1 billion sales. So from this point of view, one of the important points that you need to see that guys with whom we are speaking, they're honest for themselves, first of all, what they can do and what missing qualities they have, and they share this with the investor. So, of course, mostly we do investment or recommendation. So your game, you need to look for, since we are sitting here, we're all different. So we're different from point of view of personality, we are different from point of view of funds, size of funds, what we like, what we invest, what we do. And you need to also count that any good venture capitalist in his personal life invests not more than 20, 25 days. So it just means that we are very choosy. It is crazy guys who spread and pray, just, and do nothing and not help. And guys who help. If I help, I cannot help more than 5 companies at the same time. So since my time is too limited. So from this perspective, you need to learn again. So since you become, I always suggest for entrepreneurs to look on their venture as a single parent who would like to find someone to live with his child and love his child as he loves. So if you find a venture capitalist like your child as a baby company, it is a more critical way to success. Only with one problem, is this guy had 5 families.
Well, you talked about future before, about talking about the team on how they see the future of the company. Do you think that having defined an exit strategy already at the very beginning of the funding process is important, for example?
I don't think that it is possible to predict your exit strategy in the beginning of all process. But this question reflects the way of thinking and the goals of co-founders. And it's very important that co-founders could synchronize their goals and their efforts.
Well, I think that it is interesting also to have questions from the audience.
Yeah, I would like to comment. You asked about exits here, so
okay,
the point is very important to understand. Idea is that you guys never, when you start a company, on any stage of company, you need to think how to develop a company. Venture capitalists are thinking about exit. So if you buyers left. So any new company which coming to me, oh, it is like a very cool idea about SDN, I will say no. And I told no for many good guys. So the point is, of course, you need to see, that's why we ask who is competitors. But we are looking for competitors and we are looking for possible exits. After this become an exit point. So if you're coming to exit, it is when you're already $500 million company, there's not so many people who will buy. So if you take a statistic, Google buying possibly 2-3 companies with big check over 200 million, and average check for rest of companies 25 million. So from this perspective, you also need to estimate where your actually credibility and capability to do something.
Very often when you look at companies, you make this distinction whether they're earners or learners, as it goes. So whether people are in the business, and very many first-time founders are, and you can't blame them because you have to start somewhere. They're in the end learners, right? So they're people that are trying out startups, which very often leads to results that are positive for them, but have nothing to do with building a great company. You know, they'll get some experience, very often get a job after that, or maybe try it again, and that's when it might become more interesting. So when people are very clearly aware of what they want to build and that they want to exit, that is, I mean, just to follow up on the others, because that's what investors want to see. Because, you know, as they say, with startups it's okay to fail, but with investment funds or with your own money, you can't fail, because you have to make returns.
Can I give one more advice? One more advice for startups is the following. It was in our case pretty recently. So since previous investors came and somebody told about dividing company between founders, so founders of the companies need to take option. Don't be greedy to take immediately stake in the company. Reason is very simple. So I came from one company which was previously invested by the guys, very good company, and founders became fighters. And we needed to choose who will stay, who will leave. And imagine when the guy leaving and company already, we did investment post-money valuation, for example, $20 million. And guy living with 20% stake. Someone would like to buy his stakes and the company very hot. But other founders staying and get a salary $100,000 to get the money which the guy get in living company, this guy would need to work many, many years, and who knows, he will win or not. So by this way, option for founders is very important. So it is, you need to sit as a team and told, we are taking option, 4 years option. We are working hard together to bring this company to the next level. In other case, you will fail, you will fight, since some people grow, some people not. Some people have ability to become CEO, some never will be CEO. Some possibly need to be changed for better CTO or better VP of engineering. So from this perspective, take this very seriously.
Yeah, I wanted to mention also about CEO. This is also a sign of a great company when people quite early can recognize who can take which role. And it is a bad company when two people think they are CEO or when people alternate. I remember one example where founders actually switched CEO title from one to another like 3 times in 2 years. This is wrong, and this shouldn't be like this. And when everybody knows their role and the person who is CEO is actually the best of the founders for this role, that's great. And also, if it's great when people see the limitations. Sorry. And sometimes you need to bring an external CEO. As soon as people are humble and can understand that there is something that they cannot do, they can still make a great company. If people are jump over their heads, then they will fail.
Nothing more to add about this? Well, I don't know if we'll have time for questions from the audience. Maybe about 2 questions, so please take your chance to ask our experts about your doubts.
Okay, I mean, I see a couple of people sleeping right now, but I'm sure not everyone is sleeping. So whoever isn't sleeping, come on.
Can I ask people who have their own startups or founders or CEOs raise their hands? Just want to see. Oh, great. So, can one of the founders ask a question to investors? Okay.
Here we go. One over there.
Do I need the mic?
No, you can yell. You can yell. It's fine.
Okay, so since we have this great committee of the investors, could you please, every one of you, point out the main focus area for the investment? Probably it's not going to be software-defined networks anymore, but then what then? Sorry?
He wants us to pitch.
What is the main area of the investment? I know it's not travel, I know it's not software-defined network anymore, so what's it going to be?
It's like having a crystal ball.
Yeah, okay. Maxfield Capital really likes software as a service in different verticals, such as e-health, e-learning, fintech. So if you have a startup in that segment, you're welcome.
I don't like to narrow myself to one specific area. There are areas which I rarely invest, like hardware or medical stuff and so on. One thing that I definitely do, I invest in like American-focused companies. I very rarely invest in companies that have nothing to do with the US, but did a few times. And I prefer to invest in software which has revenue. I very rarely invest in startups which have no revenue streams.
No, I'm an old-fashioned guy. So I invest in B2B mostly. We are doing, and we are in crazy guys in B2C area. So, so PetCube, if somebody knows PetCube. But from other side, we invest mostly in hardcore companies like Sensity, Parallels, and all these guys. So from this perspective, we mostly working with B2B and a little bit of B2C.
And me and my partners, we're interested in not so much in specific technologies, but we're interested in founders of teams that can go global and have the ambition to do so, and have the ambition to engage talent, which is where we come in. So it can be software, it can be hardware, it has to be scalable technology. Very much like what Igor said, it has to have perspective in Silicon Valley, because that's where companies get launched and that's where we have strength.
Someone else?
One more question from the audience? Okay. All right, thank you very much. Thank you for the panel, to the panelists. Thank you for the insights. Thank you, Vanessa, to you for moderating the talk. And we continue the discussion. And thank you.